Hello, everybody. I wanted to do a quick update on some Sansheets models because it's been a while since we've really gone over what these models mean, what they do, how to access them, and exactly what they're showing right now in terms of divergences, revealing where we are in terms of uh, whether we are a little lower than we should be on price, a little higher than where we should be on price, and I'll do my best to kind of explain how they work and also do just a quick snapshot analysis of each of what I think are the top six Sandsheets models out there right now. I'm sure there will be follow-up questions. Don't forget we have a Discord where you can ask me and other staff members all about it, and we'll be more than happy to help and clarify um, how these work and how you can access them. So without further ado, I will just jump right into the first one we have here, which is the NVT model, which measures the overall amount of token circulation on a month-to-month basis. So this is a long-term model. So it's measuring the token circulation on a month-to-month basis versus the current market cap that it's sitting at right now. Generally speaking, when you see red sections here, prices tend to decline because we are not seeing enough circulation compared to market cap. It is simply averaging the ratio between market and circulation on a day-to-day basis and then putting them all together to give an average month NVT ratio. The redder it is, obviously, as I said, that's bearish. Orange would be semi-bearish. Yellow would be neutral. Yellow-green would be semi-bullish. And then bright green would be very bullish. We have not seen bright green in quite some time here. However, right now, we are on our seventh straight month of semi-bullishness. So all things considered, ever since we have dropped past or from our all-time high, I should say, in mid-November, uh, the divergence here has been quite good. It means that our circulation is held up quite well for Bitcoin compared to where it should be, according to this model. And it's averaging all of the circulation over at least the last 5 years or so in order to let us know whether we are above or below expectations. So right now, circulation for Bitcoin is above expectations. And as I go through each of these models, they'll mostly focus on Bitcoin, but I'm also going to touch on several altcoins for the sake of showing just a few others on the NVT model. We can see that Ethereum is actually on the other end of the spectrum and is not getting enough circulation right now. So this drop from its November all-time high was a little more justified considering we haven't really seen enough unique Ethereum, individual Ethereum, so it isn't double counting, wash traded Ethereum moving from one address to another repeatedly. It's only counting each Ethereum once per day. And all of those Ethereum that are moving once per day are not justifying the market caps being where they are now. Generally speaking, this Ethereum chart works quite well when things are bright green, as they were from May 2020 all the way to June 2021. Look at what happened to the price. That's when we absolutely exploded from 231 to a peak then of 43.62. Yes, we did decline as it became semi-bearish. Then it managed to bounce hard, even though we were staying semi-bearish. And that's mostly because Bitcoin was carrying many altcoins up during this latter half of 2021. But the long story right now, being short, would show that we are in bearish territory for a third straight month here in April. A few others just to see what's going on. Matic, semi-bearish right now. Many altcoins are looking kind of like this, especially if they're an ERC20 like Matic is. You'll see it sort of follow suit to what Ethereum is doing oftentimes, but not always. Litecoin would be on the other end of the spectrum, where we are actually seeing our eighth straight month of a bullish divergence. You can see that the price has really declined over time. By the way, the three lines you see here, this would be the high price for the month. The white line would be the last price, so the price that the month ended at, and then the low price, the bottom. So the red will always be below, green will always be above, and the white will be in the middle. But right now, obviously, price is according to the last day, and the day closed at $105 or so for Litecoin, and we can see just how far off that came. That price has come down since our all-time high. So it's being at 412 or so back in May 2021. It's give or take a 74-75% drop off, and circulation hasn't dropped off nearly as much. Therefore, the bullish divergence has been created here. You can see that given enough time, I mean, this time back in November 2020, you can see prices really took off as soon as it turned bright green here. And look what happened when it was bright red. Clearly, there's some merit here. Yellow, green here, price went up. Red, price went down. So that's enough on NVT. I will leave links to all of these, so don't worry. You will have ways to download, make a copy, and plug in your Sansheets API as long as you are a Sanbase PRO member. Next up, MVRV Opportunity and Danger Zone Divergence. What this essentially does is measure just how close the average trading returns are to a historically bullish zone, which is way up here, which we've labeled the opportunity zone, or way down here, which we've labeled the danger zone. These would be extreme zones where if any of these lines cross above that or below that, it would be a very, very likely buy opportunity or very, very likely sell opportunity, depending on which line is being crossed there. The higher it gets, or the closer it gets to the opportunity zone, the more likely prices are going to bounce. It means the investment is less risky overall because you are buying when many other traders are underwater. Vice versa, if you are buying down here, like we can see for Curve doing quite well, that means you're at a higher risk because it's closer to the danger zone when measuring the 1-day, 7-day, 30-day, 90-day, 180-day, and 365-day MVRV blended all together over time. So right now, what do we see? We see Bitcoin right at even right now. Negative 0.01 is about as even as you can get outside of negative zero, or zero, I should say. Some of the most bullish divergences, the ones that have been the most underwater for traders, we see things like assets like Celsius, assets like 1inch, Decentraland is up there, Phantom, Uniswap, among some of the assets that we see just on this short list of 30 or so assets that we have available metrics for MVRV on. The ones to avoid, comparatively speaking, would be Curve or the Graph. This can change very quickly. We can see, things are, because I am recording this video after a very good Monday that just occurred, this white line measuring the 1-day divergence, they are all very negative because the average trading returns were very positive, creating a bearish divergence on the super short-term scale. But because we can see, the 30-day, 90-day, 6-month, 1 year, most of these assets have struggled over that time period. That's why they're creating a semi-bullish divergence in many of these cases, or semi-underbought as it's marked on this particular model. So that's a little bit on MVRV. Oh, by the way, you can also look at different time intervals by themselves. So if you just want to look at like our popular 30-day MVRV, which is a nice mix between short-term and long-term traders, you're more than welcome to do that as well. And generally, if it's below 15%, that is considered to be a good historical time to justify a buy or add on to your position. So there's a little glimpse at that. All right, next up, we'll keep this one a little brief, but it's the whale holders distribution Sansheets model. And what it does is it'll show the 1-day holders percent change within the respective whales for any assets range over the past 90 days. So let's say that a whale has held anywhere between 60% to 70% of the total supply of an asset over the past 3 months. And overnight it goes from 60% up to 65%. That would be a plus 50% gain because it is halfway from its min level to its max level. Long story short, you want to look at assets that have long-term, 3 month at least, if you want to consider that long-term, 3 month highs of where they normally sit. This means that over the past 3 months, something like Litecoin right here is 90% of the way toward its high over the past 3 months. So they are holding a very large amount of supply at any given moment. And then on the other end of the spectrum, something like Augur, Binance Coin, Quant, this shows that they're near their 3 month lows for how much the whales have held. So they've likely been doing some dumping over this past 3 month stretch. So this tells you a little bit about what whale behavior is showing behind the scenes. Right now we see like Nexus Mutual just had a huge surge in whale accumulation, and they are very close to their highest point held over the past 3 months in terms of the total supply. So that's a little glimpse at that. I think this one has a lot of potential, and I'd love to go over it more thoroughly on a future video or discuss with some of you on Discord. So feel free to ask questions about it. So this one is a brand new one. The ratio of transactions in profit versus loss. We just put up a Sansheets article about this model and gave a link to it. But just to recap how it works, you'll see big numbers here and then smaller numbers here for each asset. The big number represents the 1 day ratio of transaction in profit to loss. This smaller one is the 7 day ratio of transaction in profit versus loss. Generally, when you see a high ratio of profit, that would be in red here. This means that there's a 229%, the amount of transactions that are taken in profit, there are 229% more of those compared to the amount of transactions taken when it's in a loss. So generally speaking, you want to avoid being in these assets, because if a lot of traders are taking profit, that means that there's going to be some equalizer given enough of these types of high spikes where the price will go down so that there's a lot of transactions at a loss being taken. Vice versa, if you see a lot of these green numbers, like there are a ton right now, that means that people are trading at a loss and moved some of their tokens when they were at a lower price than the price in which they first entered that address. So we can see Bitcoin right about even, just a little bit above. It looks like in the past 24 hours, there were 10% more profit than loss. In past 7 days, 9% more. That's pretty close to break even, but you can see a few highlights or outliers, I should say, like Fetch, 66% in profit. That's a bit of a yellow flag. Nexo, 229, as I said. Nexus Mutual is actually off the axis, so I might change that down the road. But I can check right here. Go to Nexus Mutual. That might be an outlier. That's either there's some incomplete data or something else, but you're not going to see a 10,000+% day. So apologize that we have something like that on this example, but it is likely a very high spike, whatever it is. OKB, pretty high up there, Paxos standard. The green numbers aren't quite as reliable, but if you see like a really, really heavy negative spike like DYDX, Coin98, basic attention is pretty low, Chili's is pretty low. That's a sign that there's a lot of capitulation happening. UMA is another one over here that I see. And there could be some opportunities for you to buy into a lot of traders' losses that are happening right now on those respective networks. All right, next up, funding rates. So there are two different things we can look at on this model. We have the average chart tab, which will show the average Bitcoin funding rate hour by hour. So this shows the last 48 hours and how things have gone between, a weighted short funding rate or a weighted long funding rate. Generally, when people are shorting, that means they're betting against the price of Bitcoin in the case of these blue dots. And that is when prices tend to move up, especially if it gets extreme. And look, right here, right when they started to short uh, at the lowest rate over these past 48 hours, that's when prices were bottoming, right? So they were betting that prices would go further down. And what happened? That ended up being the ideal price to buy in. So this model worked to perfection right here. And if you saw this negative spike and you bought in right here against all of the people who were shorting, you would have done pretty well because 11 a.m. on the 25th, by 11 p.m., so 12 hours later, sorry, I'm reading it wrong, 1 a.m. on the 25th. So we're talking about almost 24 hours later. Yeah, the price went up quite a bit, 38.4K to 40.5K. Not too bad if you started longing right here against all of these shorts. Vice versa, now we're starting to see Bitcoin's funding rate on various exchanges start to get pretty high. So that's a bit of a concern because there's a little euphoria happening. Meanwhile, these purple dots show the average altcoin funding rate across different exchanges. And when they get low, that's a good sign that altcoins may rise because there's too many people conveying FUD against altcoins. And though we don't have the prices of the average altcoin plotted here, that would be a little too much data. I can assure you that right around here, many altcoins started bottoming just like Bitcoin and really began to rise as all of these were kind of indicative of people doubting altcoins and were signaling that a bottom could very well occur. And that's what happened. You can see just recently they crossed into long territory for pretty much the first time in the last 48 hours. So there's probably a little bit of minor, I mean, that's pretty close to even, so I won't say it's euphoric, but it at least means that the FUD that was existent 24 hours ago no longer exists. And by the way, we're showing it in times in PST, but you can change that on the data tab. I do it based on my time zone, but you could easily switch to whatever time zone you're in just from a few formula modifications, and I can definitely help you out with that if you need some. And on the other view, we can actually look at each individual asset and see which coins are seeing an extreme amount of shorting or longing. If it's in yellow, that's generally kind of a more resting state. It means it's essentially neutral or close to it on the funding rate scale. But if it's green here, like we see for Axie Infinity or Banker or OKB or Waves, that's a sign that there's still a bit of shorting going on. We have these red, blue, and green dots that show 8 hours, 16 hours ago, or 24 hours ago, respectively. So you can see whether the funding rate is starting to get further short or further long. And it looks like 8 hours ago, in the case of OKB and Axie and Small Love Potion, they were actually shorting more, but because prices continued to churn over the last 8 hours, there's probably a little more longing now and a little more of a bullish bias among the average trader. So it's not quite as good of an opportunity as it was 8 hours ago, based on history, of course. And anything can happen, but we're of course playing the odds when we look at these kinds of Sansheets models and making good educated guesses based on data that have shown historical evidence of being true. And then the one asset that appears to be standing out as very euphoric and a little too much longing going on would be Dent here, and that's why it's highlighted in red. And you can see that 8 hours ago, it wasn't quite as positive. So people have really gone super euphoric on this one, and that's why you see it way up here. So that's funding rates. And then last but not least, this one has not been released yet, but probably will in the next few days, or at least within the next week. I'm still doing some tinkering to it, but what it's showing is the percentage of whale transactions, which are the amount of transactions that exceed a value of at least $100,000 or more for each respective network, it's showing how close it is to its 3-month high. So for example, Dogecoin just had a huge day, and you can see that it's showing that based on its 1-day price change percentage here, going up 14% in the last 24 hours. It was actually closer to 20 at one point. But it got to about 61% of its 3-month high in just a 4-hour interval. So each of these are measuring a 4-hour interval, which I've found to be a really nice, not too short, not too long interval to give you some useful data to react to. 61% is a ton. Pretty much anything above around 35% is something to really look at. If it's more than a third of the amount of the very best or highest 4-hour interval of whale transactions, that's pretty notable because it means that whales are making some moves at a high enough rate that you should probably pay attention to it because they can cause price direction changes, especially if there's a big pump and you see a whale transaction spike like we're seeing right here, or a big drop, which none of these assets really saw. The only negative one I can see right here in terms of price was AMP, and there really hasn't been much whale activity. Now you'll notice that there are green bars that are basically the current 4-hour whale transactions, and it's actually using a projection. So let's say we're 2 hours into the current 4-hour interval, and there's been 100 whale transactions. It'll project to estimate there will be 200 whale transactions by the second half of this 4-hour interval. Long story short, it's trying to be as real time as possible. And since 4-hour intervals, the current 4-hour interval is always incomplete. Otherwise, if it wasn't complete, or if it was complete, I should say, then it would go to the next 4-hour interval. So it's basically trying to always keep up with current times and estimate based on the trajectory it's on how notable these whale transactions are. Regardless, many assets will not show current whale transaction data for an hour or more. And in that case, the model will automatically ignore the current 4-hour interval and look at the last one, which is still very relevant. So we can see Phantom from 8 hours ago to 4 hours ago had a huge spike where it got up to 72% within its max over the past 3 months. That's a very large spike. So that would be worth noting, especially considering it happened on a price rise. That might be, we would have to look at the chart, which I won't do on this video, but it might be something that is about to cause a big price shift. And so yellow bars indicate that we don't have real-time data within the current 4-hour interval, and it's showing the last available one that happened from 4 to 8 hours ago. And sometimes there's even an 8-hour delay on some of the data. It really depends on the network and how quickly we're getting new relevant information, or sometimes there just may not be any whale transactions that have occurred in the last 4 to 8 hours if it's a really small asset, like something like wrapped NXM. I would guarantee that this is probably showing 16 hours ago because there just haven't been many whale transactions. And so it's trying to find the last time that there was relevant data and some sort of whale transaction. So those are going to be highlighted in red. So it's pretty intuitive. Green means current, yellow means at least 4 to 8 hours ago, and red means at least 8 to 16 hours ago. So looking at this chart, looking at the big coins, Bitcoin actually is at 40%, so that's higher than usual, might be worth paying attention to right now. Ethereum isn't really seeing that much relevant action at just 12%. You can see this horizontal pink line is actually showing the average among the 4 hours, so just the green ones. it's showing what the average amount of change is. So it's about a 16% spike in just all of the altcoins that we actually have 4-hour whale transaction data on. And then the gray one is I think the 8-hour change. It's not labeled right yet. As I said, this isn't complete yet, but I think it's relevant enough where I wanted to share it on this video. The other, excuse me, the other thing to note are these tiny black numbers, which actually show the average of the last 2 days. So it takes the last 8 average, or I should say, uh, yeah, I think I said it. No, I'm sorry, the last 12 4-hour intervals altogether and blends to see just how much a longer term interval is seeing in terms of whale transactions. In case you're looking at something a little more long term instead of just like catching the immediate spike like we're seeing for something like Doge or Phantom, right? Because sometimes it's hard to tune in and see the exact time that the spike happened, but if the average is still up high, like it has been for XRP, that might be something worth paying attention to. So that is a quick recap on all 6 of these models, which I think are really helpful. And as I've tried to develop more of these are 6 of the 7 or 8 that I really look at a lot and try to make some insights out of. Hopefully this has been helpful. These explanations should be um, at least get you on your way to understanding them a little better. Links are going to be in the description, and hopefully you find some use out of them. Cheers and stay safe. Talk to y'all very soon.